Well, actually, our opening full panel, panel number one, the razor's edge on the cusp of crypto innovation. If I can invite the panelists to come up on stage. And I'll make a quick introduction for the moderator, and then Nirmal will introduce the rest of the panel. So Nirmal, AK, the CTO of Merkle Science, will be leading this discussion. Here you go.
All right. Welcome. Is it working? Welcome, everyone. The first panel for today on the cusp of innovation. I'm Nirmal, the CTO and co-founder of Merkle Science, and we're a predictive analytics blockchain company, and we work with institutions and crypto natives, and we help them identify the illicit use of cryptocurrency. And I will be leading your panel for today. On the panel, we're joined with Vikas, the managing director of Rosenblatt Securities. We have Alison, who is, I want to say, the board member of the Proof of Stake Alliance. We have Nina Kaplan, president and CEO of the XVA Blockchain Association North America. Thank you, panelists, for joining us. Could you each take some time to maybe introduce yourselves to the audience? We could start with maybe Vikas.
Sure. Thanks for having me. I'm Vikas Shah. I'm the managing director of fintech investment banking at Rosenblatt. We are a investment bank based on Wall Street and specialize really in market structure, and especially when it comes to the more advanced technologies such as blockchain and crypto. That's what we do. I help companies raise capital, do mergers and acquisitions, and ultimately bring them to public as and when they are ready.
All right. Hi, everyone. Alison Mangiero. I am a board member and the acting executive director of the Proof of Stake Alliance. And the Proof of Stake Alliance, we are an advocacy organization that tries to inform legislators, regulators, and the general public about proof of stake technologies, whether that's layer one blockchains that come to consensus by proof of stake, staking as a service providers, or basically anyone who is participating in these staking ecosystems. So very happy to be here.
Hi, I'm Nina Kaplan. I'm president and CEO of XVA Blockchain's North American division. And I'm also the head of the State of New Jersey Digital Asset Legal Working Group. I'm happy to be here. A little bit colder than I expected, but.
All right, thank you, panelists. The crypto and DeFi space is not new to seeing, seismic events play out in a couple of weeks. So I'd like to start by asking our experts to maybe address something that's on everyone's mind. What do you make of some of the market events of the last few weeks? And maybe how would you explain this to someone who's seeing their first crypto winter? Vikas, would you like to?
Sure, absolutely. Somebody who's seeing their first crypto winter, I hope it is amply clear that crypto market is not without risk. There is plenty of risk, and people ought to be aware of where the risks are before going head first, kind of thing, right? Crypto market and overall DeFi market, if you take, it's a set of phenomenal innovations that have come out, and there are just incredible opportunities to build some very valuable businesses over time. But as it matures, and as some of the regulatory framework around it matures, which is what Chris was talking about earlier, there are going to be risks, and risks that we have seen in the last few weeks. Something that I think are going to be, if you really want to summarize, is in three words. The first one is pegging. The second one is leverage, and the third one is liquidity. So if you have seen these three things play out in the traditional securities market in the past, the results have generally not been very favorable when the market dislocations happen, which is what has happened in the last couple of weeks. When you have pegging, you are pegging something to an underlying, and when the peg decouples, that there's invariably a lot of pain for investors that are not well hedged, well synthesized. The liquidity part comes in is when leverage actually plays up first, which is things that are levered are going to, when something depegging happens, leverage is going to hurt and hurt really bad. Leverage helps, and till markets are humming and everybody's playing well. When there are cracks happen in depegging, there are going to be players that are going to absolutely take advantage of that depegging, and they're going to go and play the leverage game on the opposite side, and they're going to make the cracks open even wider. And the last part is liquidity. When everybody rushes for the doors and exits all at the same time, you know what hits the fan kind of thing. So that is what really has happened. So this thing is just like any other event in the history that we've seen, whether it was Asian financial crisis and contagion that happened when Asian currencies were under the same depegging pressure many years ago in the late 90s. We are seeing a similar kind of things playing out right now. So this is not for the faint of heart. You've got to do your homework first before you go head first.
Yeah, I mean, I would echo everything that you just said. And I think in terms of one of the things that was raised by the panel earlier today, they said, the industry has to mature. It has to become more institutional. We don't want to be in DeFi la land. Like, I think there's actually a lot of good things about DeFi la land or Neverland, Neverland, whatever it is. And so I think with this, what we want to be careful of is pointing the finger at one instrument or one thing that happened and saying this is the problem. So you had when the depegging happened with Terra Luna, right? And everyone was like, oh, it's algorithmic stablecoins. That's the problem. If only we had the foresight to be thinking about this. Well, even when the president's working group came together and started talking about stablecoins in November, no mention of algorithmic stablecoins. And then the hot thing for, I guess, that week, right, was it's stablecoins. We have to deal with stablecoins. That's the issue. Then you have Celsius and everything went wrong with Celsius. That's more of a CeFi business, right? Yeah. And the issues that they're having are similar to other CeFi businesses. That's not a DeFi issue, correct, right? So I think we have to be careful not just to consistently say, okay, this one thing happened. Let's take this very targeted approach to figuring out how we deal with this one thing. I think there's much more going on here, and I would just have people take a couple steps back and look at all of the things that you pointed out. So I think that's my hot take on the past couple weeks.
I'd have to say that, the news is really grim, obviously, and unfortunately, it's an unfair narrative in some ways. We're seeing a lot of schadenfreude, but I think regarding companies like Celsius, it was a problem with risk management, and there wasn't proper risk management in place. We're also seeing what can happen when some of these incredible platforms have, one manager making decisions. If they make the wrong decision, it can have a major effect. But I think the regulations, the way that regulations and regulators embrace the space and get into the space is going to determine a lot. And I think that Terra Luna should not have been a stable coin. And I think that we do need regulations and we do need stable coin regulations. And in particular, with Terra Luna, it was synthetic asset tied to, pegged to, sort of pegged to the dollar, but it wasn't really a stable coin. And so I think, we'll talk a little bit later, but regulations are really going to have to address stable coins, reserves, jurisdiction, and I think, as they said in the previous panel, a lot will determine on the infrastructure. There's going to be a lot of consolidation in the industry going forward, and it may be a while until we see things, but seeing how everyone reacts, how investors react to what's going on in the marketplace will also tell us a lot about what's going to happen going forward.
Right, thank you. Maybe another point to note is in a fast-growing industry like ours, with very little oversight, some projects do grow really quickly. And what you'll notice is that... Has it stopped?
Yes.
Hello? This has stopped, right?
It has stopped.
I can try speaking really loudly.
You're good.
I can always hand you the big girl mic if you want it. Here you go.
Yeah, so some projects grow really quickly, and I think at the end of a cycle, whenever there's a shock event, whenever there's a shock event, I think certain projects tend to break down. I think, for example, in 2013, we had Mt. Gox, where most of the activity in the cryptosphere was centralized around Mt. Gox. In 2020, I think we had an event around BitMEX, where BitMEX went down for 30 minutes. And I think there was Black Wednesday and Bitcoin crashed from 8.5K to 3.5K. And folks on my team were like, hey, Nirmal, is this the end of crypto? Is this the end of Bitcoin? What's going to happen to us, right? And I was fearful at that time as well, right? But I think in an industry which is growing this quickly with very limited oversight, when a cycle ends, you are going to have a few shock events. So that was my take on the events. The current media and public perception on our industry is extremely negative right now, right? And it's bound to happen in times of turmoil, but it's probably not fully deserved. We've done a lot of things well in the last few years. In your opinion, what has the industry done really well in the last 2 years? And from the events of the last few weeks, what are some of the learnings we can take so that we can build better financial systems going forward? Who'd like to start? Vikas? Go ahead.
Sure. Look, the industry has done an amazing job in really proving out the basic technology that has the potential to transform the financial services as we know it today. This is pretty transformational. We haven't seen something like this level of transformation in probably the history of financial services industry, where entire industry and our industry is such a lopsided industry where you have a lot more power to the sell side and then your buy side actual investors. This, if you actually take the model of DeFi and take it to the extreme, where DeFi in theory does not really need any intermediation whatsoever. In practice, that is not going to be the case, but in theory, that is possible. That has such a massive implications on the entire industry and everything that we do in the industry, from any kind of intermediation. And that could start from underwriting to securities distribution to clearing, settling, custody. You can go through the entire ecosystem. So something that is this transformational, I think, and proving the use cases out and having platforms in today's, even after all the turmoil, there are several platforms. If you take from Uniswap to Aave to Compound to DAI, MakerDAO kind of thing, all of them are operating as they absolutely intend to operate. And they have not gone through the hiccups, even though MakerDAO is also technically an algorithmic platform similar to Terra. But the thing is, they have done some of the risk management aspects better, like they have 150% collateralization as opposed to one-to-one for Terra, right? So there are a number of those kind of prudent risk management techniques and frameworks that you can have that will allow you a lot bigger cushion to play around in case of market dislocations like this. So there are lots of use cases that are being worked on, and whether it's on execution side, clearing, custody, settlement, all sorts of things that are being done in and are proving out. Once they are proving out and once they are actually able to implement in commercial use cases, and we are seeing a number of companies like Figure and some of those guys who are taking this and implementing such technologies in mortgage-backed securities, in underwriting to clearing to all of those things in mortgages, which has the ability to take down costs multifold. That will be a transformational moment for the industry, and that we think has been run correct. And what has not been done right, we just talked about, is lots of different things like not understanding risk and being able to convey that risk to the end user so they are able to better cover themselves and hedge themselves.
I mean, my quick answer in terms of what we've done right is probably hype ourselves up and crypto Twitter. I think like those two things we've done right and relatively well. But more seriously, I mean, I spend a lot of my time focusing on the staking space, and when thinking about kind of innovation and technology, I think this is a place where a lot of the newer protocols that are coming online are launching with proof of stake consensus mechanisms. ETH, so we're coming up on the merge, we think, where Ethereum will shift to proof of stake consensus. I think we've seen a lot of innovation in the staking space, which I'm very excited about, both in terms of people involved in validating these networks, securing these networks, but also some of the innovations going on in liquid staking. Again, some of those things dangerous. We can talk about depegging there too. But I think in general, it's good to see more people getting involved in these ecosystems, the technology kind of continuing to progress and move forward. I think sometimes part of the problem is the regulations don't progress at the rate that the technology is progressing or that the industry is progressing. And so you end up with new technologies, new instruments, and we're still looking at the things that were happening years ago. I mean, when you think about it, DeFi summer was 2 years ago. NFT summer was last year, right? We're just getting to the point now where we're thinking about regulating those things, and people have already moved on to the next thing. Mm-hmm. So I think, anyway, in terms of what we've done well, I think it's honestly continuing to innovate, and I think this space will continue to do that in the years to come.
Yeah, I'd have to agree that you can't help but feel optimistic when you take a look at all the incredible innovation that's happening in the industry. And this was supposed to be the year in which big institutions, banks, were supposed to enter the space and create, a lot more liquidity in the marketplace. And I think that if you want big institutions entering the space, you're going to need to have safe standards and regulations. And until you have that, you're not going to have these people entering, and it's going to have an effect. And I think, but I can speak about regulations more.
Yeah, thank you, Alice. So yeah, I think what we've got in the last few years is we've got a very stable set of foundational platforms, Uniswap, Compound, which are going to set the stage for maybe the next set of innovations in the DeFi space. We're seeing increasingly proof of stake taking over proof of work, and all those guys complaining that, hey, this is not environmentally friendly. Maybe this is the answer to that. But I think another innovation which a lot of people might not notice is the rise of institutional investing. And to a large extent, that's being powered by improvements in cybersecurity. When was the last time, for example, that you heard, hey, this exchange got hacked, right? Way back in 2017, every month you'd hear one large exchange being hacked, right? And we've had lots of improvements in cybersecurity, things around multi-party computation, hot wallet custody, etc., which have made custody itself so much safer and probably brought in a lot more institutions into the space. All right. Given the events of the last few weeks, right? I'm sure there's a lot of regulators and policymakers out there just looking at it, and it's the perfect setting for them, right? How do you think the regulatory landscape for crypto and DeFi is going to evolve in the very short future? Alison, would you like to take this?
Go ahead, Nina, go ahead.
Sorry.
Yeah, no, I think, as I've been saying, the way that regulators handle the ecosystem going forward is going to really determine, in my opinion, what's going to happen. We see the Loomis Gillibrand bill. One of the most important issues will be jurisdiction. Will it be under SEC jurisdiction or CFTC jurisdiction? In the Loomis bill, everything is clearly under CFTC jurisdiction, but I think with the midterm elections, I think it's a good start, but I don't think that bill will pass anytime soon, and it's still we still have to determine if it's going to be the SEC or the CFTC. I think obviously there's pressure on regulators now with stablecoins, and they're pretty concerned about it. New Jersey, we're working on some legislation, and New York has some pretty good legislation. The main issue with stablecoins is the reserves. They have to secure their reserves. It has to be a safe place. And I think a problem with the Terra Luna, the algorithmic stablecoins, are really being looked at, and are really. I personally don't know if those will be allowed to continue in the U.S. But again, we need clear regulations and standards to get institutional players to have confidence and in the marketplace. But also, it has to be a balance. We have to encourage innovation and jobs as well. So it's a balance. But I think that the future really depends on these regulations.
Yeah, I mean, look, even, as you said, coming into midterm elections, even if Loomis Gillibrand doesn't pass, I think the important thing there is that there's a stake in the ground now. And the bill is so sweeping that there are so many things that can then be picked up and put into other bills. Some things that I'm very excited about. I mean, even, you said it gives large jurisdiction to CFTC. Yes, that's true, but of course that depends on how you define an ancillary asset. You have Gary Gensler coming out yesterday saying well, hey, I'm not going to comment on the bill, but actually I think we shouldn't go in this direction because there are hundreds of trillions of dollars in other markets, and the same rules should apply to similar things. So I think that battle between CFTC and SEC will continue to wage. I think in terms of jurisdiction, given the events of the past few weeks, as you said, never let a crisis go to waste comes to mind. And I think regulators are looking at in that way. But I also think, given the timing of this coming up on the midterms, we'll see a lot of people talking and putting out different proposals, talking about how they might tweak the language in the bill, whether that's on the stablecoin side, on the tax side, which is something that we've been paying a lot of attention to. There's some good things in there in terms of de minimis exemptions and treatment of staking and mining rewards that push to keep that in the bill. That's important. So I think that's the kind of stuff that we've been paying attention to, and I think as an industry, we've been saying for so long, if only we had regulatory clarity, if only we had regulatory clarity. Well, I think this is a step that's going to move us in that direction. So I think that's exciting. How long it takes, I think, is a very open question.
Yeah. And I think it's also a good opportunity for states. I mean, we've seen a lot of things happening in Wyoming. And again, since I work with the state of New Jersey, I'm really excited about the opportunities to be a leader in the space going forward to bills we're working on. And I think it's an opportunity for states to really to be leaders and set examples for regulations and legislature. going forward. So.
Well, I think it's going to be interesting to see what happens during crypto winter too, because to your point about states, states being laboratories of democracy, there are some very good ideas. We can look to Wyoming for some good examples. I mean, you also have recently here in New York, the ban on certain kinds of Bitcoin mining, and there are some issues that need to be worked through with that. You have the mayor of New York and the mayor of Miami going at it, trying to court the crypto industry. Will that continue? So I think there are going to be very interesting things that play out more, at the state level and also even at the city level when we think about these crypto jobs. Does that happen in a world where these large firms are, laying large percentages of their workforces off? I don't know. I would like to think so, though, because I think the industry is here to stay, but lots of interesting things to pay attention to in the coming months.
Regarding regulations, what is your opinion on the pace at which we're innovating on the regulatory front? I mean,
the government moves so fast. I can't keep up.
I mean, we're doing NFTs and DeFi now, and you're going to get metaverse in a couple of years, right?
The government is playing catch up, obviously.
Yeah.
And as Chris Giancarlo was saying earlier, the regulators in this country tend to be older, and for them, internet, digital is really a second or third language, whereas for younger people, it's, they're fluent. So I think that's one issue. The regulators really are having a hard time keeping up in this country. And so I think that, they are really quite slow.
Well, I think one area where they are keeping up is in enforcement. I think we're seeing a lot of regulation by enforcement, which is a troubling pattern. And especially with the commitment of SEC to now be hiring more folks that are focused on enforcement. I think we've kind of seen these things where it's basically like act, and then we'll tell you if you're going to get slapped on the wrist, right?
Yeah.
So that's, maybe that's been one thing where we've been ahead, but not the greatest.
That's right. All right.
There's a question there.
Yes, please. Hi. Sorry, I don't have a microphone, but my name is Dominic. I'm from the New York State Department of Financial Services. I was just wondering if any of the panelists had a comment on the new stablecoin guidance that we released on June 8th.
It's excellent. It's really, really good and really clear, the 3 points that are made. And I think that stablecoin bill is going to be should be a model, not just for the U.S., but maybe globally. And this is a global industry, so we have to be consistent with laws. And I think, that's an excellent one, and that's an excellent example. And thank you for bringing that up.
Yes, sir.
While we're at it, questions. Jim Knox from Aon. So, question for the panel. What do you think the chances are of the industry regulating itself, like a FINRA for broker-dealer, like someone like a global DC and SRO regulating itself? Do you think it's effective? Do you think it's possible? What are your thoughts?
I don't think it's likely to happen. I don't know.
I mean, I think it's important. I think industry principles are incredibly important. I think organizations like Global DCA convening everyone and trying to get various groups in the ecosystem, together and say, what are the lines that we can't cross, right? And I think the first step is basically like, we need standards in place first before we can then say, okay, we are going to have member firms or other people in the industry abide by those standards. So I think this work in terms of, whether it's realistic or not, I think we'll see. But I think that work is incredibly important and needs to be done. I mean, when we first started Proof of Stake Alliance, one of the first things we did was we said, we're going to come up with industry principles for staking as a service providers. There's a certain language that we should be using to talk about these things. There are certain ways we have to go about this business if we're going to be compliant and if we're going to kind of succeed in the broader landscape. And I just think that work is incredibly important.
Look, should the industry self-regulate? If regulators ever had their way, they would never allow self-regulation kind of thing for most part. Regulators may not have a choice when it comes to pure DeFi. Now, because just the way the pure DeFi works, it's not jurisdiction specific, and it's going to be very hard to regulate some of those things, except that they can create a certain subnets, as they call it, and regulate a subnet. But to regulate a pure DeFi is not going to be trivial. And it's not, you need the entire world's regulators working in tandem to kind of even think about something like that. So that's not going to be that trivial to implement, right?
Unfortunately, we're out of time, right? Panelists, thank you so much for your comments today, and the audience as well enjoyed your questions. Unfortunately, we're out of time, but thank you so much for being here.